Hi everybody, Bob Iaccino from Pure Exposure Growth Series. It is Sunday night, getting ready to go see the movie The Joker. But before I do that, like I told you guys in the last video, I wanted to take a look at the futures and see if we saw any sort of reversal of the move we saw Friday, or the optimism that I described on my last video about the US-China trade deal. And so far, we're not doing that. Two key things I'm looking at. Right now, futures are up. It is early. We do have the Columbus Day holiday in the US, so we might not have as much liquidity as normal, but with electronic trading and basically 23, 6.5 markets in terms of the amount of time they trade, it isn't as big a factor, but it still could be a factor. Now, the two things that I'm looking at, risk assets are higher, not much, but two things. Number one, copper is not up. It's actually down about 0.5%. That bothers me a tiny bit, simply because copper is more indicative of how China feels about the deal that was verbally agreed to on Friday, more so than the US. China's the biggest consumer and smelter of copper. So if they feel very optimistic, they'll start buying copper, copper futures, copper hedges, physical copper, etc. Number two, the 5-year note. Look at the 5-year note chart. 5-year note chart closed below its 50-day moving average on Friday. This is the futures. It's staying below there now. That potentially could mean a little bit higher yields on the short end. So I'm watching that as well to see if that bleeds into funding pressure or if the entire curve moves that way. So from a price action perspective, the 5-year is looking pretty weak. If it gets above that 50, it really is more in the context of other things that might matter, but I'm going to watch what that 5-year note does around that 50-day moving average. So copper 5-year note. Right now, the futures are acting as you would expect them to be, a little bit higher, so no real negative news on the trade deal from the time I made the last video. I'll talk to you guys soon.